Welcome back. Wednesday morning, right in the middle of the week. Let's get you up to date with the stocks which are in the news. Our research team is standing by, and on top of the list, we're going to be talking about IOC and Macrotech developers. Sonal joins in with the latest. Sonal, hi, good morning.
Good morning, Rima. Well, for IOC, as expected, the company has gone ahead. The board has approved fundraising. They will have a meeting on the 7th of June where they will consider rights issue as well. And this is something which was expected as well. They will be doing it for capex requirements. Now, do remember last week itself, BPCL's board had approved raising up to 18,000 crore rupees through rights issue. And now all eyes are on HPCL. And Citi had come out with an interesting note where they said HPCL's case is more curious given no direct government holding in the company. They await details on the modality of its capital raise, and of course government had spoken about infusing some capital in these three companies. So two of them have announced this. The third one is something we are watching out for. For Macrotech developers, they have come out with their Q1 update where pre-sales were strong. However, collections dipped on a quarter-on-quarter and on a YY basis. Pre-sales were up 17% on a YY basis. Collections up 8% YY. Net debt has slightly increased because of project additions and also lower collections. And they have added 5 new projects having 7.1 million square feet of saleable area. So pre-sales is strong, some dip in collections, on the back of which the stock will be in focus today.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Abhishek. He's joining in to tell us about HDFC Bank's Q1 update. Morning, Abhishek.
Morning, Nigel. So it looks like a weak number, especially on the loan growth front. Net interest margin could be under pressure given the fact that cost of fund is rising and you are losing out on CD ratio. So a merged number, that is HDFC Bank and HDFC Limited. Over there, the deposit growth is 16.2% YOY and about 1.2% sequentially. The loan growth of merged entity is about 13% YOY and about 0.66% quarter-on-quarter. Coming on to the standalone numbers of HDFC Bank without HDFC Limited numbers, deposit growth is at 19.2% YOY and about 1.6% sequentially. The CASA ratio is at 42.5% when compared to 44.4% in the previous quarter. This is at 11th quarter low, and the advances growth is at 15.8% YOY and about 0.9% sequentially. So sequentially or quarter-on-quarter, the loan growth is the lowest that you are seeing in last 26 quarters. CD ratio has declined to 84.45% when compared to around 85% in the previous quarter, which is at a 12-quarter low in itself. So the stock could be under pressure in trade today. Back to you.
Okay, Abhishek, thanks very much for that. That's HDFC, but there are other banks which have reported first quarter pre-quarterlies as well. You've got, I think, IndusInd, AU Small Finance Bank. Abhishek, take us through those numbers as well.
Well, Prashant, to begin with IndusInd Bank, the loan growth is pretty strong. However, the CASA ratio is at 24-quarter low. Deposits have grown by 14.5% YOY and about 3.25% quarter-on-quarter. The CASA ratio has dipped below 40% for the first time in last 6 years that I am seeing their numbers. So it's at 24-quarter low of 39.9% when compared to 40.1% in the previous quarter. Loan growth remains healthy at 21.4% YOY and about 3.8% sequentially. AU Small Finance Bank, over there, the deposit growth is weak. However, loan growth is strong. Deposits are up nearly 27% YOY and almost flat on a sequential basis. Advances growth is at 29% YOY and about 7.5% quarter-on-quarter. So CD ratio has improved both YOY and quarter-on-quarter. Cost of funds has inched up by almost 30 basis points quarter-on-quarter, and the CASA ratio has dipped sharply to 35% versus more than 38% in the previous quarter. RBL Bank, the deposit growth is weak. Deposits are up 8.1% YOY and about 0.9% sequentially. Loan growth is pretty healthy at more than 20% YOY and about 4% sequentially. So the CD ratio has improved both YOY and quarter-on-quarter. CASA ratio is at 37.3% when compared to 37.4% in the previous quarter. Bandhan Bank, the net interest margin could be under pressure. Deposits have grown by 16.6% YOY and about 0.4% quarter-on-quarter, but the CASA ratio has declined sharply to 36% versus 39.3% in the previous quarter. Even the loan book is down massively by 5.5% quarter-on-quarter. So the CD ratio has declined to 95% versus 101% in the previous quarter. And we also have a resignation. CFO has resigned, so that could also weigh on the stock price today. Back to you.
Thank you very much for that. Yesterday, we had Bandhan Bank a bit subdued in trade, down close to about 2%. I'm watching Samvardhan Motherson Sumi. The company has made 2 acquisitions. One of them is called Yachiyo. Now, Yachiyo is a subsidiary of Honda, and Motherson Sumi will be acquiring an 81% stake in Yachiyo. The The balance will be held by Honda. There is another small acquisition called Prism, but there the company will be investing only about $14 million initially. Now, about Yachiyo, because that's a significant acquisition. One, the valuation price appears to be fairly reasonable. The company is going to be paying 145 million euro. The acquired company had revenues of about 840 million euros. So one, the acquisition price is attractive. Secondly, with this acquisition, the company forays into the sunroof segment where the company currently does not have any presence. Yachiyo globally has a market share of close to about 9% in sunroof. So the acquisition helps Samvardhan Motherson Sumi diversify into fuel tank, sunroof segment. This is the pro forma analysis. And thirdly, it gives them greater entry, penetration into the Japanese OEM market, and plus they will have Honda as a strong client for them because remember, Honda will continue to hold about a 19% stake in Yachiyo. So these are the three key takeaways. Valuation attractive, helps them foray into new segments like sunroof, and they will have, this acquisition can enable greater penetration with Japanese OEMs, particularly Honda. Catch the management of Samvardhan Motherson at 9:50 on Bazaar today. Okay, let's move on and go to Ekta for more updates on Strides and Syngene. Ekta.
Thanks for that. Well, yes, an interesting deal which has taken place. Stelis is going to be divesting its Unit 3 multimodal facility for 702 crores to Syngene. Remember, Stelis is Strides' biopharma CDMO arm. The consideration is going to be settled in cash by Syngene. It will take around 90 days to close this transaction. For Syngene, it is important. They are on an uptrend. The facility, which was initially built to manufacture COVID-19 vaccines, will now be repurposed. Syngene is going to invest around 100 crores. It will help strengthen their position in biologic CDMO. Stelis in Q4, remember the company had indicated to us, Strides had indicated that they are looking at strategic options for Stelis. The total amount of debt which was paid by the group was 720 crores in FY23. The company is in fact confident of reducing the net debt to EBITDA to less than 3x versus an exit run rate of 3.4 times in FY23. So the proceeds might in fact help in terms of the overall debt reduction. The company, Stelis, will continue to expand via Unit 2 as well as Unit 1. Unit 2 is already US FDA approved and multiple regulatory agencies have approved it. So overall, it is a win-win both for Syngene, which will expand into biologic CDMO, as well as Stelis, which is going to get in money in order to reduce debt as well as look at the other opportunities. Expect both the stocks to be in the green.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Surbhi to wind this down with some more stocks that are in the news. Surbhi?
Morning, Nigel. So first on my radar is Genus Power. The company, along with GIC, will invest around $2 billion to build a smart metering solutions platform. Now, in this platform, GIC will hold around 74% stake and Genus Power will hold the other 26%. Genus will be the exclusive supplier to this platform and the platform will bid for smart meter projects in India. Additionally, another GIC affiliate will invest 520 odd crores in Genus Power for 15% stake through stock warrants. So that will be on our radar. Suzlon Energy, another one on our radar because they are going to be a board meet on 7th July to consider a capital raise. And we'll also watch out for LIC Housing Finance as the company will replace HDFC in the Nifty Financial Services Index with effect from July 13th.
Okay, thank you very much for that. A quick recap then of the top stocks. Stocks with positive news flow are IOC, Macrotech Developers, Samvardhan Motherson, Strides Pharma, Syngene International, Genus Power, Suzlon Energy, LIC Housing Finance. While HDFC Bank is the only stock with negative news flow. And the other bank stocks are likely to open neutral. Not done just yet. We've got Ekta back with us to give us the brokerage update for the day. Ekta.
Thanks for that. Well, I'll start with a couple on Hero Moto. Jefferies has written they have a buy call. They've raised their target price to 3,500. According to them, the X440 provides an attractive proposition for customers. CLSA has a sell call target 2708 on Hero. They've said that it is an attractive price point which could help Hero gain share in the 250cc plus segment. Competitive intensity, however, is increasing in the two-wheeler segment as well. JP Morgan has written on KPIT Technologies underweight target price 540. For them, they expect the company to clock a 20% growth beyond FY24. which is what the stock is pricing in over the next decade on a reverse DCF. However, JP Morgan continues to argue it will need to win one mega deal every year, which they believe is optimistic to assume. So a bit of caution coming in there. And lastly, Citi has written on Navin Fluoro. They've initiated with a buy and a target price of 5,600. They think the company has multiple levers in place to drive industry-leading growth.
All right, Ekta, thanks very much for that. And that's basically the list of stocks that you need to watch out for as we start today's session. We'll take a quick commercial break here. Devin Choksi of KR Choksi will join in for some fundamental stock analysis. Later, we'll connect with the management of Texmaco Rail and Engineering to discuss the business outlook with them. Stay with us.